Amid the sell-off in U.S. equities over the last week, many are worried about not only the exposure to stocks from American investors, but also market participants in other countries as well. What do all the new risks to the so-called American exceptionalism trade mean for the rest of the world? Chelsey Dulaney from the Wall Street Journal joins us now. Really appreciate your time. We're big fans of the piece. So, foreign investors own nearly 20% of all U.S. equities, and that number is up from 7% at the start of the century. What has U.S. equity exposure meant for those investors compared to the options they have in other global markets?
Yeah, I think people think of American exceptionalism as sort of a US story, but it has been the global story. It's been the biggest investment trend in global markets for over a decade now. So this really has to do with the way the US economy recovered faster than the rest of the world after the financial crisis. So that's sort of the where this started to take root. And so you did see US markets doing better. And then it sort of coincided with a lot of other trends that have made American markets really the only game in town coming into this year. One of those has been, of course, the tech trade. There's been a lot of talk about how that's led the market to become very concentrated, but for global investors as well, they've become very concentrated in those American tech stocks as well. On the bond side, you had negative interest rates in the rest of the world. That's really not what you want to be buying if you're an investor. So a lot of investors would invest in U.S. Treasuries or U.S. corporate bonds. And then you had Trump, and after the election last year, there was of course the Trump trade. People getting very excited about tax cuts, about deregulation, and so all of this led into this really turbocharged trade among global investors to just pile into the US. And you sort of mentioned there that the rest of the world hasn't been looking that good. It's been pretty dismal if you're an investor in the UK and you're buying the FTSE 100. And so I think a lot of investors have been riding the wave of US markets. And now, of course, they're very, very vulnerable.
Yeah, Chelsey, do I remember this correctly from your story that in the same time period it took our S&P 500 to go 170%? I think the FTSE is up 30% or so.
Yeah, I mean, I don't think that's changed very much
Really?
over the past couple of weeks, and I mean those numbers are really stark, and they have a huge impact on people. So if you were to have invested in, an index fund that is pretty heavily weighted on the US in 2008, you would have tripled your money. You would have $3,000 to your $1,000. But if you had invested in an index fund that didn't include the US, you would have maybe have $1,500. So for an investor, whether you're big or small, those numbers are really significant.
What type of collateral damage can a downturn in the U.S. markets lead to for investors in those countries?
Yeah, I mean, there are two risks to this, I think. The first is that everyone, I sort of mentioned it in my story, but American exceptionalism trade has impacted everyone, truly, every pensioner, every pensioner in every part of the world, sovereign wealth funds, insurers. It's just been retail investors. Like there's just been it's spread hugely. So there are a lot of people who are seeing a lot of red in their portfolio now, and that's a big shift from past market sell-offs. In the past, you didn't see, Europeans day trading. That's been a big change in the past couple of years since the pandemic. And so a lot of people, a lot of small investors are a lot more exposed now through these trading apps. And then you have, pensions and insurers and all sorts of sovereign wealth funds who are now heavily exposed as well. So I think we are kind of in uncharted territory just because of how much the asset allocation has changed. And so there is a lot more exposure, and it's unclear like what the impact will be on sentiment. Will Europeans or Japanese, will they be more sensitive now to market sell-offs than they have in the past? And how will that impact on spending and investments and things like that? And then you also have a risk that actually has been playing out over the past several days, which is that the US market is very exposed to foreigners. So we mentioned this number earlier, but foreigners account for about 20% of the US equity market. And they have an extra vulnerability through the dollar, which has been for the past 15 years going up. And that made this trade even more attractive because when you convert those returns on your stock portfolio back to euros or Swedish krona or Japanese yen, it makes it look even bigger. But we've seen this big reversal both in the dollar and stocks. And so foreign investors are just getting absolutely pummeled on their US stock exposure right now. So that makes them even more likely to sell assets because they have this dual exposure. And that's one of the things that analysts say has probably been leading to even more, has been really exacerbating some of the sell-offs we've seen, is that these foreign investors are pulling out of the US.
Sure. Yeah, we have seen at least the dollar index down about 6% off of its recent highs. So certainly the story of a weakened greenback and the implications for foreign investment is really important. Yeah, you mentioned retail traders in other country. There was a name you wrote about in your piece called Trade Republic. Not a platform I'm familiar with, and I don't know if many of our viewers are. How comparable is that to a sort of democratized platform like a Robinhood? And the second part of that is, what are those U.S. stocks that Trade Republic retail investors in Europe have been gravitated towards? Is it the Nvidias and Apples and Teslas of the world, much like here in the United States?
Yeah, I mean, I haven't used Trade Republic itself, but I've used other European trading apps just to play around with, and they're pretty similar to Robinhood, I'd say. It's sort of gamified, it's color coded, it's
Mm.
pretty easy to do. And I mean, this is just such a ground shift in the way Europeans operate because up until the pandemic, pretty much nobody invested in stocks. No, there were really no small time traders in Europe. You had to be quite wealthy if you wanted to trade stocks. So that has been a huge shift. And I think people originally thought that maybe they would be buying, Volkswagen or LVMH, and actually what they've been buying is Nvidia, Tesla, all of the big U.S. tech stocks. So Trade Republic, I spoke to them for my article, and almost every single stock, the main stocks traded on that platform are U.S. tech stocks. I think Rheinmetall, which is the big German defense contractor, did make it into the top 10, but it's almost exclusively American companies, and it's almost exclusively big tech companies.
Yeah, that's an incredible detail that I don't know that us here stateside would necessarily think about. This line really jumped out to me in your piece. You wrote, in New Zealand, the pension fund for the Anglican Church clergy notched a 27% increase on its international stock portfolio in the last fiscal year. Were there any surprise holders of U.S. equities that you learned about in your story? Because that one certainly jumped off the page to me.
Yeah, I think like what really shocked me when I was doing this story was just, yeah, how widespread the American exceptionalism trade is. And I think part of that as well, which we haven't gotten to yet, but part of that driver, one of the drivers of that as well is the rise of passive investing. So some of the pension funds in particular that I mentioned in this story, one being the Anglican Church Pension Fund, as well. We talk about the Royal Borough of Kensington and Chelsea making also huge returns on this U.S. stock portfolio, so much so that they've actually stopped contributing to the pension because they have so much money they can pay out every obligation they have two times over. And a lot of that is due to passive investing. So they're basically just in I guess in a simplified way, they're buying an index fund. Those index funds have become increasingly weighted towards the U.S. I think the MSCI World, which is one of the big funds that a lot of asset managers build their portfolios around, it's 73% of its assets now are in the U.S. So a lot of people, just through the rise of passive investing, have become extremely heavily weighted towards the U.S. And that's been great for a lot of people over the past decade. It has, allowed a lot of pensioners and institutional investors and the rest of the world where there wouldn't be getting any returns to have these big profits.
For sure. We're just about out of time, but do you suspect this current market turbulence could prompt any type of rethinking for a global investment strategy, particularly in terms of exposure to the US, or maybe a little too early to tell?
Yeah, I think that's the trillion dollar question right now. I've been speaking to a lot of investors overseas. They're all saying this is a regime shift. It is, really making people rethink their exposure to the US, not just because of stocks or bonds, but because of the dollar as well. So you really have all three of those things working against the US right now. But there's a lot of reasons why the US is exceptional. Some of those things are structural. They're big markets. They have a lot of liquidity. A lot of companies, when they want to list, they want to go to the US because the capital markets are just the biggest. And a lot of that stuff is really hard to unwind. So I think a lot of investors are saying, we are more cautious now. Maybe we'll pare back a little bit. But the US does just have these structural advantages because of, being the main market since the end of World War II. And that's something that doesn't go away in a couple of weeks.
The piece at the Wall Street Journal is called How the End of the American Exceptionalism Trade is Rippling Around the Globe. Very well done from the reporter here in this interview, Chelsey Dulaney from the Wall Street Journal. Chelsey, thanks a lot for joining us. Great to have your perspective.
Thanks so much for having me.